My name is Yakub Ibrahimov. Today I'm going to be talking about October pivot point analysis, and I'll be focusing on three tradable instruments. We'll be discussing gold, euro dollar, pound dollar, and of course in the Q&A session we can discuss about other tradable pairs that you might have in mind. First of all, what is pivot point and what can you really understand of it? That's the starting point for us. You can imagine pivot point being as a center of balance for your trade, where the market tries to find its balance inside. Just like everything in nature, I believe the market is also live, and therefore market tends to find its balance that it really deserves so. Today's webinar is going to be interactive, therefore I would like you to write your questions down as we go along. We will have approximately 20 minutes dedicated to actual analysis and discussion about pivot point, how it is done, where you can analyze pivot points, etc. And we'll spend another 20 minutes for Q&A session, questions and answers. But before I go ahead and start that part, I would like to bring risk disclaimer for your information. Trading Forex on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade Forex or foreign exchange, you should carefully consider your investment objectives and level of experience, and of course your risk appetite. There is a possibility that you may sustain a loss of some or all of your equity, and therefore you should not invest the money that you cannot afford losing. You should be aware of all risks associated with Forex trading and seek advice from an independent financial advisor may you have any doubts. And who am I? As I said, my name is Yakub Ibrahimov. I'm a trader, trainer, and a Forex savvy. I have been trading in Forex markets since 2005, 2006. It's going to be my 10th year anniversary this year in November, just next month. And I'm also working for on a book called Forex Not for Dummies, which I really hoped that it was going to be coming alive by November, but it's going to come alive, I believe, towards April. So back to discussion. What is trade? How can we analyze market based on pivot points, and what can we really look for it? Basically, I highly recommend you to analyze and to calculate your pivot points, preferably manually, at the end of every month. This basically, if you are doing it manually, it will make you forcefully go ahead and look at market from bigger time frame. When you look at, of course, the market from bigger time frame, you will get to understand what is the real trend or where is the market really leading forward. And this way we can get to understand and see what we can really expect from the market and what tradable opportunities we might have in front of us. So how can you do it? Basically, you open your chart, you go to monthly time frame. You can go ahead and also open a2zforex.com. On A2Z you have the trading tools. Go to pivot calculator, and the rest is pretty simple. Once you have the pivot calculator, you just look at your chart, whatever your previous month's high, low, open and close are, you just fill it in and press calculate. It will give you the pivot. What is it important for you, or what important value it has for you, is the following. When the market generally opens below the pivot line, which I have marked here with the dark blue, it tends to go back and test it once again. So if it is opening bearish at the first tradable day of the month, you are likely to see that the market is going to go bullish for the first half of the month, and therefore you should be looking for opportunities to basically test the market and opportunities to trade the market. At the moment on gold, monthly tradable level or monthly pivot level is at 1123 zone, and we are just 100 pips or so below it as the market opened today for the 1st of October. What we can see also on monthly time frame point of view is that our 200 moving average and 50 moving average have made a moving average sandwich. It's a funny term that I'm using myself. Whenever the market is within these two moving averages, no matter what time frame it is, we are likely to see a sideways movement, which we are facing for the last 3, 4, 5, 6 months even. Over here I'm referring to 1, 2, 3, 4, 5, 6, 7 months we have had sideways movements more or less. Let's go to weekly time frame. You can see this a little clearly. The trend becomes a little more clear for us. On weekly time frame, we can see that last week we had a hammer formation, which is a bearish market movement or bearish candlestick formation. And right after it, this week we have had approximately 300 pips drop. However, overall, for the last 3 weeks, 2.5 weeks, we have had 4.2% appreciation from gold, especially for the fact that market anticipated another round of QE, quantitative easing, from Japan and from Europe, and moreover we have had anticipation regarding to the Chinese struggle that the world economy had, and that was the main reason why we had this 2 weeks straightforward bullish market development for prior to this week. And at the moment, as I said a little earlier, we have 1123 zone as our monthly pivot line. Monthly pivotal support lies at 1090 level, and monthly pivotal resistance is at 1146 zone. So if you look at it, I at the moment expect the yellow metal to rise towards 1123 level once again before making a drop towards the 1090 zone. On daily time frame, we have even a little strange technical development. It's for the following reason. We have the 200 moving average, which is the blue line over here, sloping downwards, becoming flat, whereas we have the 50 moving average, 50-day moving average, showing upwards. So there is a conflict of market movement between the longer and shorter term market developments. And also, if you go ahead and look at the MACD down here, you would see that MACD is moving just towards the zero line. On the other hand, RSI has broken below the 50 level, which is this blue line over here, which is a sign for the bearish movement. It's once again confirming that we have the possibility for the market to rise to 1125 level before we see another round of fall to the support zone of 1095 to 1080 level. This is the major support zone that we have. Overall, political crisis could create another spark pushing gold down first to 1080 level, but that drop could also in itself trigger another round of bullish development, pushing the yellow metal to 1180 zone, which is the level of more or less 200 moving average. If you have any question about gold, you can feel free to ask me. On intraday, we have the bearish push, which is clearly visible, especially for this week. We had this doji movement or doji candlestick development on hourly time frame back on the 28th of September, and since then the market started falling. If you look at it, that doji actually also itself falls onto the 1146 level, which is the which is the pivotal resistance level for the month of October. At this given moment, we have both of our moving average on intraday time frame sloping downwards, which is bearish signal. MACD is signal line is showing upwards. However, MACD bars are below the zero line, and RSI is below the 30 level, trying to break above it. Just a side note for you: when RSI is below the 30 level, it doesn't necessarily mean that market is oversold and you should look for buying it. As an example, over here we have had a good example. RSI was below 30 level. Indeed, market just corrected itself a little bit, and then we saw the furthermore bearish movement. So therefore, we could actually expect the market to be bearish furthermore. However, once again, I highly expect that we will see this highlighted level to be unlocked first, which is the level of 1120.22 level to 1125 level. From there on, we can see the drop to at least to 1100 zone. This webinar itself is sponsored by Trade360, our crowd trading sponsor. And if you look at the Trade360 platform, you can see that 65% of the traders at the moment are actually shorting gold, whereas 35% of them are longing. So if you look at from that perspective, you can also see that from the majority of the market players' perspective, the market is still bearish as well, which is in line with what we are saying. But it might be also true that some of them are ignoring the current fact that we could have bullish development. Now let's pass to euro dollar. Euro dollar is my strange pair. I really do not like trading euro dollar for the last almost 8 months. Basically, since the SMB event in January, I dislike trading euro dollar. And if you look at it, it's just sideways movement. There is no excitement from this pair. The market is just moving between 1.05 to 1.11, and it's just within that level, and anything extra is just fake breakouts that we have seen so far. However, one thing worth mentioning is that if you can see this white trend line that I have drawn, the market has broken above it first time since basically the Q4 of 2014. In 1 year, first time ever, the market broke above it, and it actually closed above it as well, as the last month's candle closed above this trend line. It is also above the 5-month moving average, and we have the 200 moving average flat, which is this blue line over here, whereas 50-month moving average is sloping downwards. On the other hand, RSI down here is also flat, right above 30 level, and MACD signal line is trying to break below the MACD bars, which is a possible signal for at least a reversal or temporary upwards movement. Let's move to weekly time frame. On weekly time frame, you can see that we have conflict, literally conflict, between our moving averages and MACD and RSI itself. We can see that 50 moving average, 50-week moving average is sloping downwards. 5-week moving average is flat. MACD is getting closer and closer to the zero line, which is a sign that we could possibly expect, if it breaks above the zero line, we could expect the pair to start rallying on bullish side. But RSI is also on flat zone, so it is on an indecisive zone, which is in line also the major support level over here. This orange line that you see supporting the current level of the weekly move is weekly support level, which has been there already since the January 15th of this year. And it's also supported by the trend line that we just talked about, the white line. So we can be recommended to stay away of this pair as it is very much indecisive, and we want to trade what we see, not what we want to see. On daily time frame, we can see that the pair is below the monthly pivot line. This blue line 1.1240 zone is the monthly pivot line. The market today opened below the pivotal level, and on daily time frame, MACD bars is just above the zero level. RSI is trying to break below the 50 zone, and we have the market testing the 200-day moving averages, as well as we have this trend line as well. So taking that into consideration, we could for now expect the pair to take its support from the 50 and 200 moving average and test at least the 1.1240 zone before we see any kind of other strong market development. This overall strong support zone becomes even better or even clearly visible on intraday time frame. If you look at the intraday time frame, you can see that the pair just touched the weekly support line, the trend line that I was talking about on larger time frame, and from there on it has bounced up slightly, but it is still within that orange colored support zone. This is a zone, this is not a support line, which covers basically 1.1180 to 1.1130 zone, and as long as it is within this range, we don't really expect to make a bigger entry. However, right now my expectation, if you are going to be making any entry, should be based on bullish side, enter at or above 1.1130 zone with a small tight stop loss of 1.1120, and you can aim to make at least 1.1210, and from there on 1.1240 zone as your target. That makes approximately 80 to 90 pips target with 20 pips stop loss that you might be aiming to make for. From Trade 360's amazing crowd trading platform point of view, you can see that 62% of the traders are already longing, whereas 38% of the traders are still short. It might also resemble for me that probably some of these guys are still short because they have been caught up at a longer level, 1.05 level or 1.08 level, and they are trying to catch up the lower rallies. But we don't expect bigger lower rally yet or on the horizon. At the moment, I believe as long as the pair is above the 1.0880 zone, which is the support zone, monthly pivotal support zone over here, as long as we are above that level, we should be aiming for higher highs, and even we could go for 1.1620 level, which was almost the highest high of the previously August high. Let's go to pound dollar. On pound dollar, we can see that the market is making higher high, lower low. It's quite chaotic, let's call it this way. We can't really see on which direction it is really moving. In the last 5-6 years, the pair is just making a high of 1.6570 zone, and then it's bouncing to 1.47 level. So it's literally a fight of 2,300 pips up and down, up and down. But if you look at the monthly time frame, you would see that your moving average, 200-month moving average, is almost flat. Your 50-month moving average is sloping down, so the pressure is on bearish side. Your MACD is trying to break below the MACD bars, and on top of it, you have this divergence between the market and the overall the market development, or RSI MACD, and so on. While we have lower low over here, we have higher highs on MACD, which is quite confusing on monthly time frame point of view. However, let's look at once again on the technical analysis point of view. Moving averages support bearish market development. RSI is below 50 zone. It also supports the weekly bearishness and monthly bearishness. And only thing that is indecisive for now is MACD, which is close to zero line, but MACD signal line is trying to break below the MACD bars. On weekly time frame, we can see that the pair is trying to touch or test at least the 1.50 psychological support zone, and the MACD over here just went below the zero line. RSI found itself a resistance at 50 neutral level, and it is right now between 50 and 30 zone. Our monthly pivot zone is over here at 1.5290 level. This month the pair opened below the pivot line, so we are expecting just like the other pairs a movement to the monthly pivot line before we see any kind of other significant movement. So I would expect to actually see 1.53 level, 1.5350 zone to be more precise, which is the close open of this dodgy weekly candle over here, and from there on we can expect to short the pair to at least 1.50 zone. On daily time frame, I've drawn my amazing and famous Fibonacci, and I can see that the pair is finding right now itself a support at 110% custom Fibonacci zone, which is at 1.5113 zone, and from there on I should be expecting at least as an initial target a target to the 1.5289 1.5239 zone. From here onwards we will be staying flat, and we will see which direction the market will really lead us to. At the moment there is also a divergence between RSI and the market. Market is making lower low compared to RSI is making higher high. So we will be cautiously watching this pair, with our current preferences being on the bullish side. On intraday time frame, you can see this Fibonacci level working like a charm, 110% at 1.5113 zone, and from here we should be aiming for the target towards the 88% once again custom Fibonacci retracement zone at 1.5240 level. MACD is supporting this move. RSI is just indecisive. It's between the 50 zone more or less, and 5-hour moving average is just showing upwards. The pair is very close to 50-hour moving average as well. So we will be looking and carefully analyzing this pair as we are going to be focusing onwards for the following market movement. At the moment, my preference would be buying at or close to 1.5130 zone. I actually had last week and this week given a buy limit order at 1.5101 level, which my pair or my entry was missed just by 7 pips difference today. So from there on, we should at least be looking for 1.5240 level. That would be a fair target for us, with of course the initial caution on the 100% Fibonacci retracement zone at 1.5170 level. What is the market talking, or what's the market really doing about this pair? From the crowd trading perspective, we can see that 60% of the traders are right now selling, while 40% of them are buying. It is again an indication for us that the the market is, there is no big difference between 60 and 40. It's very close to each other, and it shows that there is quite a confusion among the traders as the pair has been moving strangely in the close past. Now let's go back to Trade 360 platform just to show you what I'm really talking about. If you go ahead and open an account with Trade 360 right now, you can just do it by going to a2zforex.com. On the home page, you will see the Trade 360 banner on the right hand side over here. You can just click on it. You'll be getting right away $50 bonus, which is withdrawable if you reach the required qualifications, which I highly recommend you to do so. It's better than trading on demo overall, because you know that if you make this money into a substantial amount of money, if you can, of course, you would be able to withdraw it, and therefore you might have the feeling for it. You can also get a $10,000 demo account for it if you want, if you don't want to get that bonus, and you can test it. What I like about this this market movement is that I actually try to perceive the market from different perspective. Whenever we see that the market is selling specific trading instrument more than 70% or buying it, that's for me a signal line that it's enough, it's time to get out of the market. That's the way I personally myself perceive the market. As an example right now, if you can look at it at this given moment, 79% of the traders over here are shorting pound dollar. So as we discussed ourselves though, we are expecting the pair actually to rise up. So if 79% are doing it, and we know that 95% of the traders are taking the wrong steps, I would rather to stay with those limited number of people who are taking the right decision, and of course they will be the one with the right call as well. As an example right now, you can see that USD Japanese yen also is 72% buy, or traders, 72% of the traders are buying it. This is also another signal for you to be cautious on long opportunities on USD Japanese yen, as there might be short signals coming up very soon. This is pretty much it for today's webinar. Thank you very much for watching us, and if you have any other question, please feel free to write on the question section.